Welcome to another episode of Live at the Nut Bar. I'm David Cunningham, Chief Squirrel, and today I'm joined by Callan who heads up our advisory business, so that's Think Mortgage Brokers, and one of the team, Kat McInnes, who deals with first-time buyers every day. And the reason I'm focusing on first-home buyers is because the theme of this podcast is anyone can buy a house in 4 years, broker says. And that broker was Callan here. Just as a preface, there was a recent report that the research was 18 to 39-year-olds, so right in that first home buyer sort of bracket. And out of that research, 9 in 10 of people in that age group still saw owning a home as a core life goal. But here's the thing, 40% said it was not attainable anymore. So today we're really exploring that and exploring this article that Callan wrote 10 years ago that said anyone can buy a home in 4 years, broker says. So you're the broker. Is that relevant today still, or has the world changed so much that that's rubbish?
Yeah, well, 10 years ago there was a similar theme where getting on the property ladder or buying your first home was getting hard and unattainable. So somehow a journalist sort of ran with a bit of a catchy headline, and it was about just the awareness of how attainable home ownership is and how you can go about it. And really today it's very much the same.
Okay, so we'll perhaps go through some of those tactics to how to get there. Kat, you deal with first home buyers or potential first home buyers every day. Why do they come to you in the first place? Is it like, hey, I'm ready, or is it like, what's the sort of mood of that person that contacts you as a mortgage advisor?
More often people will be feeling a lot of emotions, so they'll be feeling a little bit nervous. It can be very intimidating to lay your financial position out to a complete stranger. And so there's certainly that sense of hesitation, I think, when I'm first chatting with someone. Often they have come, largely I would say because friends or family have sort of given them that little push to say, hey, actually chat to someone and just see where you're at. Because it's really hard to know where you're going if you don't know where you're starting.
So the first home buyers often come to you not expecting, really just to say, hey, I probably can't qualify, but and what's the reality that you can share with them?
Yeah, so that's true. Sometimes almost a little bit defensive and sort of, oh look, we know we probably can't do this, but we just wanted to check. But more often than not, we can give them some good news that it is going to be achievable, even if it's not right away. We can put a plan together for how they're going to get there.
Yeah. What would you say in terms of people that come, hesitant, I doubt I'll qualify, but actually they're ready now, versus those where a bit more work is needed and you can help lay out a plan? Sort of relatively?
Yeah, probably more that I think you can give surprisingly good news to. And they come off that call feling quite different than
so the odds are better than 50-50 then.
So,
Okay, well that's positive. Hey, so going back to the article from 10 years ago, a house in 4 years, so why is that possible, or how is it possible? Like what's and I'm thinking back to my own sort of buying my first home. It was before the days of KiwiSaver and all that stuff. So what are the sort of things that 10 years ago made it possible? And then let's fast forward and say, what's changed since then, if anything? So
10 years ago, KiwiSaver was established, but it was not as widely established as it was now, and there's probably not as the same level of awareness. But it was using KiwiSaver to build up a deposit to then take advantage of the withdrawal that you can get to buy your first home.
So to be clear, in those days it was about 10 years old KiwiSaver, I think, maybe a little bit more, but people's balances would have been maybe lower.
Yes.
And the concept of using it for your deposit on your home was less common perhaps?
100%.
So you were sort of creating that avenue as an opportunity.
Yeah, well, we're really talking to people who probably didn't have a plan, didn't think it was attainable or not in the short term, and it was about absolutely use KiwiSaver, increase your contribution rates if you can.
So by that you mean you were putting in 3%, your employer was putting in 3%, so put in
4, 6, 8. Take advantage of your employer contributions, your government sort of subsidy as well.
So it's the sort of idea that rather than saving into a savings account, save it into your KiwiSaver account.
Well, it depends on the individual, but for a lot of people who we were sort of talking to, they weren't really establishing good savings habits, and KiwiSaver was just such a good tool to just have it deducted out of your pay. You don't see it, it doesn't sit there tempting you to spend it on something.
The language is you pay yourself first. In fact, you pay your first home opportunity first it comes out of your salary, it doesn't come into your bank account, and then you have to go and save it. You can't dip into it because, hey, let's go to Fiji for a holiday sort of thing. And so it's locked away, but with a very clear purpose to use it quite quickly.
Yeah, 100%.
Yeah.
I'm quite a big advocate for that. And I do say to my clients, despite what I do, I am a little bit of a spender, and I'm fully honest about that. And so for me, having that savings locked away, paying myself first, putting savings into a different bank if that's an option for you, it really does help, and there's no need to be sort of embarrassed about choosing that way to build up your deposit.
Yeah, and this is basically all about deposit. I guess deposit's one thing and affordability of the loan is another, and what you can buy with that money. What are the other things? So saving that deposit, is that really the key?
Yeah, so in addition to your deposit, depending on your time frame, you might want to pay off some debt, some personal debt, and
so, going into a mortgage application, if you've got a personal loan for a car, for example, is that a bad thing?
It might not be a bad thing, but it might impact your sort of overall affordability if you're having to pay off a car loan plus look to take on a mortgage repayment.
So credit cards back then would have been a thing, make sure your credit card balance is zero.
Yeah.
Today, buy now, pay later, does that come up a bit?
Yeah, very often. It's really
Very
common,
often,
and the banks
okay.
don't like it. So getting rid of stuff like that.
Right, okay, that's a good sort of modern tip, because no one had heard of buy now, pay later 15 years ago, had they?
And understand the impact that credit cards do have on your borrowing capacity, because even if you do pay it off every month, the bank will allow for that limit.
Yeah.
So 10 grand credit card limit's going to take your borrowing down by 50 to 60k, so it's quite significant.
Wow, 50 to 60k for a 10 grand credit card. So what's the advice there? Have a lower the limit lower the limit to 2 grand or whatever you need to use it when rewards whatever it is, pay it off. Callan, you'd also in the article a decade ago talked about account behaviour, and when the bank looks at your application, if they see lots of payments to bars and cafes, and are you paying your bill on time? Is that still a thing?
That's gone probably full circle. It became a lot bigger thing around 5 years ago when the banks are sort of looking over everything with a fine-tooth comb. I think today it's more around what are your commitments, and then there's less scrutiny around discretionary expenses. So, people have got spare money, they'll tend to find something to spend it on or enjoy it with. But today it's more around what are your commitments, have you got enough reasonable left over to sort of live.
And service the mortgage. So that's when so it's sort of the get the deposit to be able to buy a house, and we'll come to the house buying process in a minute. But then make sure that the bank can see you'll be able to afford the mortgage once you have it.
Yeah. I think it's nice. It's an awful banky term, but proven affordability is something that they do look at. Yeah. And so that's sort of going, okay, well, if you're paying rent, if you're saving, does that kind of equate to what your mortgage payment's going to be? So that's a sort of good thing to look at if you're starting out.
Rent's an interesting one, isn't it? Because effectively when you move from renting to owning, you're swapping rent for interest. Do they tend to balance each other out? Like, do you find that actually people's outgoings don't necessarily change much when they're in the home ownership versus a renting situation? Or is renting cheaper?
I'd say renting's cheaper.
Okay.
Yeah, it depends a little. It moves around a little bit with interest rates, and more recently, rents have been quite sort of stable. But you've go through periods where rent's going up 10% a year, and the sort of right now and it depends on obviously the quality of the house you're renting and living in, but there is a bit of a step up. But the good thing is that step up, often with first home buyers, they don't realise is the hardest time is right at the start. Because they're taking on a commitment that, they'll probably pay off over 20, hopefully not 30 years, but a long time. And over that time, if they were renting, inflation will catch it and it'll keep going up, whereas with your mortgage it's going down.
That's a good point. So the concept is that your expenses, the rent is going to go up, whereas when you borrowed the money, apart from interest rates going up and down, that amount borrowed isn't going up with inflation, it stays the same and goes down gradually, and so it becomes sort of more and your salary goes up, so you've got the opposite, it's not salary going up and rent going up, it's salary going up and interest payments actually in theory potentially going down or stable.
And that's a thing that a lot of people don't sort of think too deeply about is, salaries go up with inflation, which the level will fluctuate, but also just career advancement. People tend to get more progress in their roles and get higher salaries, so that's why the hardest time's often right at the start.
But the best time is now, because in a year's time the rent will be higher and the property value might be higher and so on. So the best time is now. So having that conversation, could I get on the ladder now, or what would I need to do to buy my first home sooner is important. Anything that's changed, KiwiSaver balances must be bigger. Is that having an impact? You've been at this business for how long, a decade or?
For longer.
A bit longer. Are you seeing those average KiwiSaver balances higher than they were say, a few years ago?
Yeah, and it's a good point what you were saying before. So if I think back to doing this job, probably even 10 years ago, probably one of the big factors that was stopping people getting into the market was actually deposit. Mm-hmm. So I had a lot more conversations back then around how do we get that deposit to the level it needs to be. I'd say the majority of people that I talk to now actually have or are close to the deposit. So that kind of limiting factor has changed quite a bit.
And that's almost entirely because of
KiwiSaver.
Yeah, I read a stat that for every first home buyer home, 1.7 KiwiSavers are used. In other words, in most cases, it's a couple. In fact, in almost every case, that would say, is that your experience that it's almost universal that first home buyers are using the KiwiSaver?
Pretty much, yeah.
And to be clear, you can only use it for your first home.
That's right, yeah.
So in a separation situation, you don't get a sort of a second, a second go at it or anything?
If you've already withdrawn it, no. If you didn't use KiwiSaver for your first home and you're buying something else further down the track, possibly.
Yeah. So KiwiSaver, just a sense of how big is the typical KiwiSaver balance across two couples? Are we talking, 50,000 or a lot more than that these days?
Oh, gosh, I actually wouldn't know what the average was.
It really varies because a lot of people will buy their first home with a 10% deposit, and so whereas other people might have just waited and have a lot more, but it's not uncommon for 6 figures into KiwiSaver for
over $100,000 between a couple
or each if they've been in there, but it just depends on their runway, how long they've been in there.
So let's talk a bit about how big a deposit needs to be. You mentioned 10%, but banks sort of treat anything of 20% or more is like gold for them, and I think it's cheaper generally, the interest rates or whatever are cheaper. What's sort of the trade-off between, say, 10% and 20% deposit?
I think so, yes, if you've got 10% deposit, you will pay a slightly higher interest rate.
Yep. But if you can afford it, you can get your house now.
You can get your house sooner, and it's weighing that up. So how much longer would it take you to save to get to that 20% when you're still then paying money on rent and potentially seeing house prices increase?
Yeah. Is it quite common for first home buyers to have 20%, or is it pretty uncommon?
We do still see first home buyers with 20%. Often with a bit of help from mum and dad, I'll be honest.
Okay, so it's actually, if you've got somewhere between 10 and 20% deposit, you're in. Okay, and KiwiSaver will often be much of that. Just touching on the bank of mum and dad, is it a new thing, or has it always been that way that the mum and dad have sort of helped?
Bank of mum and dad helped me.
Bank of mum and dad helped me. How about you, Callan?
Yes.
Yeah, so there you go. Us oldies, right? Because sometimes you hear that the bank of mum and dad is this new thing. It's the only way people get into their houses. Well, the only reason I got my first house was bank of mum and dad, and the same for these two. So interesting that it's the same. So
but not everyone's in that position, and I don't feel like if you're not in that position to get family help that rules you out, because it definitely doesn't.
In your experience, how does bank of mum and dad work? Is it like you might suggest, hey, ask your parents, or have people already done that, or have parents often offered, or is there a sort of theme?
Yeah, often parents have offered, and actually coming back to you asked why people come and chat to you, often that might have been the driving force, is that someone has said, look, we could give you some money towards this if you want to do it.
Callan, anyone can buy a house in 4 years. Is that as relevant for, say, a 20-year-old as a 30-year-old?
Yeah, I guess the detail around that article was about buying a house within your means, and and when you look at someone's household income, then the logic's today it's probably more like 5 years to have things affordable with living costs and everything. So the logic is if you're buying a house 5 times your income, then that's sort of going to result in something that's close to affordable, and what that means, if you look at the sort of average income, is around 75k. So 5 times an average income is going to be really difficult in just about everywhere in New Zealand. So,
but if that's a couple, it's so maybe that's the thing. At 20, you're probably not a couple.
So
at 30, quite possibly are. So, but if there are two of you at 75,000, 150,000, 5 times, that's quite a big number, isn't it?
Correct. Yeah, and yeah. So one of the key strategies is two people. So that makes it a hell of a lot easier. Or a single person needs quite a reasonable income, and generally that's a couple. But we're seeing more and more where it's people are buying with siblings, buying with friends, to just to make it more attainable.
Yeah. Do you see that much, Kat?
Yeah, it's definitely becoming more common, and I think the banks, in the past, they have made that kind of setup a little bit more complicated, but we're seeing them sort of open their doors to those kind of loans a bit more now.
The time starts as early as possible, but as you say, that multiple of your earnings is 5 times earnings. Household income is say 100,000, then $500,000 house. How many $500,000 houses are there in Auckland that you see? Is it just they're much more than that?
Yeah, look, I mean, you're probably looking at an apartment if you're at that level, but I guess you're probably also seeing a slightly higher average income in Auckland to balance that.
Yeah.
I think it is hard sometimes to kind of accept the realities of what a first home might look like, and it's just realising it's not going to be your forever home.
Do most people buying their first home buy a house, or is it actually an apartment, townhouse sort of thing?
Still a mix. I'd say still a lot of my first home buyers would like to buy a standalone property that's got a little bit of land, but the reality does perhaps lend itself more to townhouses.
And what's the balance of do up versus maybe a brand new house? Is the first home buyers buy brand new sort of homes?
More so, yeah. I think really? my first house was a do-up, and that's what you did then. I almost cried when I walked into it on the day we bought it. I was like, well, what have we done? But I think people...
I had the same feeling. How about you?
First house was an apartment.
Okay.
Yeah. I think that has changed quite a bit. I think people don't have the time or the energy to tackle a big renovation project. So I would probably say I see more clients now who are looking for something that's newer.
New build, and even new builds. So how affordable are new builds?
Well,
say in Auckland, what would you see? What have you seen in the last few months in sense of new builds?
Yeah, so I've had a few clients buy new build townhouses and sort of that kind of 650 to 800 range.
But standalone home, you'd have to be a long way out of the CBD, would you, to get that sort of level? But it does happen, does it?
It does happen, and that's the trade-off. So these clients, so they're living fairly close to the centre of town. And for them, they've got, they don't know they've got no maintenance, they don't have to have got a master build guarantee for 10 years. It's a really good option. But others are happy to go that bit further out to get that little bit of land.
Callan, you sort of lived down in Wellington. What's the perspective from a Wellington angle?
Well, it's a bit cheaper. Same as what Kat's saying. I think definitely a preference for a standalone house. But then it comes a bit of a trade-off between budget, location, how people want to commute and the like. So we're seeing more and more townhouses, the odd apartment, but it's not so much the quarter acre dream, but the standalone house is still the most popular.
In Wellington, the latest stats are 37% of all house sales went to first home buyers, which is, I think, a record and the highest of any place in the country. Why is that?
Yeah, well, it's the prices have come back so much from when they peaked in 2022. And
how much have they fallen from that?
Oh, I think it depends what stat you use, but it's 25% or so.
Yeah. So $1 million house, 3.5-4 years ago, is now 750. So it's on sale.
Yeah.
Or maybe it was overpriced previously, a bit of both.
Yeah, and also in that time you've had a big surge in interest rates, which have come back, and house prices have come back. So I just think we're at that space where it's attainable for more and more first home buyers. It's banks are more willing to lend on with those sort of lower deposits. They've got less regulation around how many they can give out, and there's plenty of houses on the market, and it's also if you're ready to buy your house, it's really nice conditions to buy it because you can take your time, do your due diligence. It's not the frenzy where you have to get in and rush due diligence and make offers and you're competing with 10 other offers.
Yeah, so go back sort of 4 years, if you didn't see a house and make an offer straight away, it was gone. So, and I guess that helps drive this frenzy to to buy before someone else does, sort of thing, and that pushes prices up, and the vendor can ask for a higher and higher price.
Yeah.
So what are some of the other sort of things you see at the moment? So more choices, as you say, Callan, less urgency, so you can take your time. Are there other factors that are playing into the hands of first home buyers today, Kat?
I think that's probably a key one. The lower interest rates and helping people to feel a little bit more confident.
So context, we've interest rates have risen probably 0.5–0.75% in the last for 2-year terms, for example. Has that had a noticeable impact, or is it that they're lower than they were, so it actually doesn't feel so bad?
Yeah, I think it has had a bit of an impact on people's borrowing capacity. But also a little bit more of a sense of optimism, I suppose.
So it's easier than it was. So good time in terms of lower house prices, less competition, so you can take your time, you can search around. You're not having to compete at auction, which is quite hard for first home buyers, isn't it? And interest rates are lower. Anything else that's sort of making it I've called it a Goldilocks time for first home buyers. Is that a fair reflection, do you think?
I think so. Obviously, I'm a little bit biased working in in the property field, but I do think so. I think there's a little bit of nervousness around what's happening globally, but I sort of encourage people to focus on what they can control.
I mean, at the end of the day, wars will end, petrol prices will come back down, life will go on, houses will keep selling.
Yes.
There's a good level of stock, a healthy level of activity, despite supposed doom and gloom. The number of house sales happening at the moment is on par with the last decade, so it's not as tough as it might seem.
You want to take the time to make the right decision, as you were saying, but you also don't want to get sort of stuck not acting.
Once people have their first home, Kat, how does the next 2 or 3 years typically play out? Do you keep in contact with those first home buyers and guide them further on the journey?
Yes. Yeah.
What would that next, that first 1, 2, 5 years of home ownership look like in terms of what you see for first home buyers? What are they doing?
Yeah. So for a lot of my first home buyers, for the first couple of years, they're sort of just focusing on getting used to a new budget. They've got obviously the mortgage to manage. They're going to have property rates, property insurance. No matter whether you're buying new or buying a do-up, people want to put their own spin on the place. So I think for most first home buyers, we don't tend to see sort of significant overpayment of the mortgage initially. We're just working on giving them some certainty, knowing what that budget looks like, and sort of getting them used to owning their own home.
And when you get sort of into the 2 to 5 year window, is that when it starts to become easier?
I think so.
Why is that?
Yeah, I think, generally people's incomes have come up a little bit. They're kind of used to living on the new budget of having a house, and that's when we could start to do things like chipping away at the mortgage a bit more quickly.
And then something very difficult happens called having children, right?
Yes.
And how do you cope in that situation? Is that really hard?
I think it can be hard, yes,
Yeah, well, a lot of first home buyers now have started their families first.
Oh, really?
Well. Yeah,
already got kids.
I think the average age of first child is early 30s, and the average age of the first KiwiSaver withdrawal is about 36.
Okay, well that's a flipping of the tables, isn't it? Because it was like get married, get your house, have children. So you're saying is get married much later than it used to be, perhaps have children, and you've got through that no income from one parent.
Or have your children, get your house, get married.
It's all the old rules are gone. But
it's all up in the air. But it is more and more common. For the children to already feature before the first time. Oh, that's an interesting insight. It never occurred to me. Hey, so let's wrap this up. Callan, still possible to buy a home in 4 years? Yeah, I think the key is if you got nothing today, but you got some reasonable jobs. If you can get into KiwiSaver, up your contributions, you can build up a deposit pretty quick and buy within your means. But I think the key is that if you're unsure where you stand, get some advice, get a plan, and that's where Kat and the team are always here to help.
Kat, 9 in 10 people still want to own a home. I think New Zealand's home ownership, interestingly, is going up at the moment. It bottomed at low 60s and it's sort of drifting up. So that would sort of imply that it sort of maybe is easier to get into a home than it was a few years ago. Is that what you see? 9 in 10 people want to own a home, and 6 or 7 of those 10, I suppose, to start with, make it?
Yeah, I think so. I think if we take everything that's happening in the world out of it, I think there's still that kind of emotional Kiwi need to own a home or want to own a home.
Yeah. So I think the theme is no matter what you hear in the media, tens of thousands of young Kiwis are buying their first home every year, and it may be more within reach than you think. So have a plan. Talk to an expert like Kat, a mortgage advisor at Squirrel or somewhere else, and just get started, because it could be far more attainable than you think. Thanks for listening to today's podcast. If you have any questions or things you'd like us to talk about in the future, get in touch with us at david@squirrel.co.nz or john@squirrel.co.nz. And please do share this and subscribe anywhere you get your podcasts. The opinions expressed in this podcast are not financial advice or a recommendation of any financial product. Any commentary provided are personal views and are not necessarily representative of the opinions of Squirrel. As always, we recommend seeking professional investment or mortgage advice before taking any action.